Welcome, ladies and gentlemen, to Commodity TV and the new edition of our online interview series. We want to talk now to MAG.TO, and George Paspalas, the CEO, is here with us, the famous silver producer. Hey, George, how are you? Good morning to Canada.
Good morning, or good afternoon, or good night. Jochen, how are you?
All good, perfect. Thank you very much. Really happy with the interest card yesterday. And I must say, silver today already well over $31. I think this will go further. Also, gold looks extremely good, over 2,600, which helps you a lot. So you are, the latest precious metal, base metals producer here in Mexico. You are doing a great job. And of course, the first question, how is the quarter so far going?
Well, we're not at the end, so I can't tell you everything.
That's right. Just a little bit.
Yes, but a forward-looking statement. I guess we started up the plant last year. We very quickly got the commercial production. We then reached the nameplate in Q3, and since then we've been sort of steady state, let's say. So as we move forward, I think it's fair to assume quarter on quarter, they're going to be pretty similar. We're working very closely with Fresnillo, tweaking knobs now, optimizing, looking for efficiency gains. Where can we bring costs down more and that sort of stuff. So, but I think to say Q3 will be relatively in line with Q2 would not be giving too much away.
Okay, super. I think you also increased a bit your guidance for the year. You have also higher head grades, which is really favorable, right?
Oh my God! We have a very high grade deposit. So the first thing you worry about, right, when you start mining and processing a high grade deposit is it really high grade, right? And we've proven that, and more so, we've taken it to the next level now. What we've seen in Q1 and Q2 of this year is an overperformance on the grade, right? The grade coming from the main Valor vein at the moment, because these things can change, right? But at the moment seems to be overperforming the geological resource reserve model. And, we released a technical report in March where we actually announced our inaugural reserves for Juanicipio. We've always been resources because, resources almost approximate reserves at Juanicipio, right? This is a structurally controlled. It's it's sitting above the source of the minerals, so it's been so mineralized so many times it's homogeneous. Again, by virtue of sitting on the source, though, any permeable structure around that's not the main vein, the Valdecanes vein, will be mineralized. And so we have a number of those. But we haven't drilled those off because, A, we know they're there, we can see them. It costs money to drill them. Why? Just mine them. And that's what we're doing. Now, they're not in our models. They're not in the technical report in terms of the mine plan. Obviously not in the reserves, but we're mining them, and some of them are running 500, 600, 700 grams per ton silver at the moment because they're right at the top. So those two factors combined, overperformance in the main grade overperformance in the main vein, contributions from these inferred structures that we know are there, they're real, but they're not in any mine plan because they're inferred, has given that grade overperformance. So that means, okay, we've gone from 380 to 420 grams per ton silver for the grade. That was our original guidance for 2024. We've taken that up to be 420 to 460. We're seeing better grade performance on the base metals as well, but at Juanicipio, 75% of the revenue comes from silver. That's right. Juanicipio, MAG Silver, is a silver company, 75% from silver, 10% from gold. So we didn't bother to increase guidance on the other metals. We'll just take the cash as the byproduct credit, right?
Absolutely.
So the higher grade means higher production. Higher production means for the same cost, you're spending lower costs. So we had that sort of perfect storm of increasing grade, reducing costs. So, as we go forward, costs are probably the biggest focus for us. We're doing okay on costs, right? One of the one of the real pitfalls, I think, in our industry is, as metal prices go up, sometimes costs tend to creep up with it. And, we've got successive quarters now of costs coming down, and we want to keep that going.
Yeah, definitely. And I saw in your second quarter, you had all-in sustaining costs only of $4.49 per ounce silver sold. I mean, that's incredible, isn't it? Could that go further down?
It's a good number. Well, that's. I'm not gonna give any guidance on that, because that's a really good result. And I'll tell you why. Because we have 2 capital projects coming up, which isn't going to materially affect cash flow from the operations, because they're spread out over time. But they may make it hard for us to hit that AISIN number, but the AISIN number will be low. Look, we're in the $5 for the first half of the year. Right? So I think Juanicipio will definitely continue to return very, very attractive AISIN, which obviously infers a very, very good margin. The 2 projects, just to be complete, the first one is we've filled our first tailing cell. We're building our second tailing cell now, and over the course of the next 12 months, we're probably going to spend around $8 million to build that. So that's just a little bit of capital going in on top of the $30 million of sustaining that we spend just to run the mine and the business down there. The second project, though, is we've constructed a tunnel, and we're going to put a conveyor belt in it, and we're going to bring the crushed ore out on a conveyor. That's going to significantly affect, to a good sense, reduce our dollars per ton operating cost. Right? And particularly in our case, where we have a generational mine life, every year you get savings for that. It just adds, it accretes, right? So that's about $30 million, and that'll be start spending it towards the end of this year, and it'll go for about 18 months. So I think that'll stop the AISIN going to 2 or 1 or something.
Yeah. Okay.
But I still think it'll be very, very competitive.
Yeah, but it will be then possible after you have spent the money and things are working well, then costs will decrease massively, right? That's how I understand it.
We spend the money to make money, Jochen.
Yeah.
Right. Well, the tailings dam you have to do.
Yeah, that's normal.
If you don't go to the toilet, you know what happens. That's the tailings, and so you have to do that to run. But the conveyor belt is a real capital investment to reduce operating costs for the life of the mine.
Okay, super. So that means things are going extremely well. You are investing also in the ore body, of course, but so far you have only, let's say, used looked at 5% of the project. So what are your plans going forward with the other 95%?
Look, we're very keen to do some exploration away from where we're mining, right? As you say, we've only explored 5% of the property. It's a big property. It's 7 kilometres wide, 17 kilometres long, right? And there's very compelling reasons. If you look at our presentation on the website, there's a slide there that just shows what we've found at Valdecanes. What makes this asset so special, such a tier 1 asset, is we sit on top of an upwelling zone. Well, we believe there's 2 or 3 more on the property.
Oops.
So we have applications in to get exploration permits, but they're very slow coming out of the government at the moment. So we're looking at strategies with our partner. Is there some different ways to maybe explore some of these properties without exploring from surface? Remember, we're in an underground mine now, so we can explore from underground. So I'd like to think that come next year, we will be starting to position ourselves to do some real, true grassroots exploration in Juanicipio. And look, that's exciting. And I don't think there's anything in MAG that'll move our share price up than having another discovery on the Juanicipio property.
Of course, that would be extremely positive. And it would still stay underground, right? So you are not facing any problems, let's say, with politics. How do you, by the way, how do you see the political situation now in Mexico? Because Obrador is off in approximately 2 weeks.
Yes. I think there's going to be a lot of water under the bridge in those 2 weeks. It's sort of very concerning on a global scale, particularly with the major adjacent trading partners with Mexico, the US and Canada. And you can read all this stuff in the press. There's a lot of concern about the judicial reform and a lot of the reforms coming through that will affect certain mining, certain parts of the mining sector. You referred to open pits. You know, if you're in a very arid area, there's proposed change to water, granting of water leases and indigenous consultation in some areas. So you only have to look at the Fraser Institute of Mining Jurisdictions, which is published every year, to see the trajectory of where Mexico has gone, which is such a tragedy, Jochen, because it's a wonderful country for geological endowment. It's a wonderful country for mining history, mining knowledge, mining expertise, great people, and bloody good food. You know, it's it's a shame that the full potential of the geological endowment could become limited. I mean, in our case, we're fortunate that we're permitted and we're operating.
Yeah. So you are in a good standing with everything.
Yeah.
Yeah, perfect. Super. Okay, so let's move a bit farther away to the US, to the Deer Trail project in Utah. What's going on there?
Yes, we're continuing to drill off now what we believe could be one of the spokes on our hub and spoke model. It's the Carissa, what we've called Carissa. We had a significant intercept in January of last year. We've stepped out around that. We've found stuff. We're trying to see, we've got 2 more holes going in this year. We're trying to see if we can make that hang together into a shape. So that's exciting. You know, it's Deer Trail, it take because of the geological complexity of the system, which is a good thing for geologists because it generally infers big deposits, good deposits. It's slow drilling. So it takes us a while, but it also allows us to think on every hole. And so we've been pretty lucky that most holes we've drilled, we've hit something or really learned a lot about where to drill next. And so Deer Trail's coming together, but it's not coming together quickly. It'll take some time.
Absolutely. So could that be, let's say, a speculation possibility by the end of the decade that could be in production?
Are you trying to get me in trouble?
No, never ever. Just hypothetical.
Well,
would that be the plan on a distant future to bring that into production as your second mine project?
So I think, excuse me, sorry. I think that the development from, let's say, discovery to building a mine on something like Deer Trail is probably 12, 15 years.
Okay.
We could actually have that discovery tomorrow on the hole, or it could be next year or the year after. So it's not going to be super quickly, but we think if we hit what we're going to hit, it's going to be quite significant in terms of grade and size.
Okay, super. What are the next plans on Deer Trail? Let's say for 2025 already?
Well, at the end of, after these 2 holes, we're going to just down the rigs for a little while. We're about 16 or 17 holes into the program. Let's do a complete, like a think tank. Let's get our internal brains together. Let's get some external experts into the room as well. And then what have we done? What have we found? What have we learned? What does that mean for what could be here? And where do we go next? So we're going to have just a real technical review and then make the next steps. I would say, depending on these last 2 holes, if they really start to prove up this Carissa, we'll probably hit that Carissa next year. We know there's a porphyry hub, and at some point in time, we're probably going to, because we've drilled 2 holes down and it's proven that the hubs are there, but we haven't drilled into the hub. And we might want to find out whether that's mineralized or not. So there could be a hole into the porphyry hub as well.
Okay, super. And then you have another project, which is exploration in Canada and Ontario, the Larder Project. So what's the status there?
Well, that's sort of counterpoint to Deer Trail. I mean, compared to Deer Trail, it's like drilling holes in German cheese, Swiss cheese.
Swiss cheese better.
German beer is better though, right? Well, that Swiss beer is good. Yeah. And the beer is good, to be honest with you. We're getting very high drill rates, which is generating a massive amount of data, right? And so we're on a timeline that we have to spend the $23 million Canadian flow through that we raised in January of last year. We have to do that by December, and we're pretty well on target to do that. But we're now, what we've done at Larder is we've proven at depth the shoots that were identified in the shallow drilling continue and the gold grade goes up. Okay, that was the first point we wanted to prove. How does that hang together in size and context of something we'll mine? We probably have to do a bit more drilling there. But what we did to get an overall appreciation of the property is we moved the rigs. We've got 2 rigs on that property. We moved the rigs over to the second and third order structures, and we're drilling those because our belief there is that the geology is different there. And what we find on the break is high grade, narrow shoots that plunge. They get deep quickly, like the Kerr Addison mine, which is the analog here. And if we can find where these shoots blow out at depth, and that's what we have to drill there next, 10 million ounces of production at 10.5 grams per tonne. That's what we want to find here. But on the second and third order structures, we may find closer to surface and maybe larger deposits, something more akin to Upper Beaver and Upper Canada, which both have been recent discoveries on these second and third order structures. And then we recently announced the purchase of an adjacent property. It's called Gold State. It was we call it a sleeper. It's a property that was forgotten. All right. It's got a drill hole in it that's got visible gold. It's got incredible grab samples off surface, almost unexplored. And so we'd like to get into that. We've got some very, as I said, very interesting grab samples there. We want to follow up with drilling next year. So we're pretty excited about Larder. And then if I take Larder to your question about how long for Deer Trail, Larder's a bit different in the sense of it's infrastructure pregnant. Right? The Trans-Canada Highway runs by it, the railway runs by it, the power line runs by it, and within a 75-kilometre radius, there's about 24 or 25 either mothballed or underutilised milling facilities. So this is a project that when you have a discovery, right, all you need to do is access the material and pull it out, and you're into cash flow. So that is something that's probably reasonable to assume you may be within a 10-year window, like earlier than a 10-year window to get to your cash flow.
Okay, super. So that means organically we can say over the next 10 years you have 2 possible projects in addition which could be brought into production or made production ready.
Correct. And don't forget exploration success on one of Scipio. So we actually have 3.
Of course.
Yeah, we have 3. And that, I mean, I can't understate how value accretive a discovery is at one of Scipio because, our mining rates now come up to match the nameplate of the mill. But it appears that the mill might be able to do a bit more. So anything that we find extra, we can put through the mill. And then if we find sufficient that we can mine a lot more, we proved over the last few years, we have very accretive cash flow running it through the Saucedo plant. And so, there's no capital involved. Right?
That's fantastic.
There's a tolling charge.
Yeah.
Which is very reasonable. And
that's easy then.
That's why, you think one of Scipio, I mean, if you have a discovery there, you have a mine there, that's where you need, that's great to find that stuff. We have capacity in the plant. We have two adjacent plants, actually, presently as well, that can process it with no capital. That's how you make money. That's how you make money in mining.
Yeah, absolutely. So make money in mining, that's also a good keyword here. I think financially you are extremely stable because you still do not have debt, right?
No debt. We have $97 million of cash at the end of Q2. We have a $40 million revolving line of credit, which we haven't drawn on. It's, you know, Jochen, we've talked for years. And, you know, my view of MAG now is we've grown up. And when you grow up, you have to have all these tools at your disposal, right? We're a producer in Mexico, line of credit's just good insurance to have on the balance sheet, right? We filed an NCIB because, you know, if there are times now when we feel that the market isn't kind to us and that we're trading below our NAV, we're undervalued, we may buy some shares. Right?
Yeah, that makes really sense.
Yeah, we put out a shelf prospectus only just to have that facility there because that's what grown up people do.
Yeah.
Right. And so the revolver is not a debt that I think we'll be accessing.
Yeah.
Hopefully never.
Yeah.
It's there should you need it.
Yeah, absolutely. So as you are a large silver producer, a question from my side, because we heard that, for example, Chinese solar producers, they are knocking already onto the doors in South America, Middle America, silver producers. We want to buy your silver. We want to make sure we get it. Have you had stuff like this? What is your view on the silver market? My feeling is we are very, very close to a real breakout because on the CME, also in London, the walls are emptying quite fast and most of the silver, is already owned by somebody. So this is not for delivery. What's your view on that?
I studied engineering, but in engineering, I had to go and do a course in economics. Right. And I remember this graph of supply and demand, and that determined price, right? The silver market's been in deficit for 6 years, 6 consecutive years.
Exactly.
There's no line of sight for any major increases in production, right? Incremental. Juanicipio came online. 20 million ounces of silver a year. Market's still in deficit, right?
Absolutely.
Right. So, as you say, the last time I looked, which I think might have been over a year ago, silver inventories had halved. Known silver inventories had halved. When does it break? Is it when Elon Musk goes to the cupboard to get a bar of silver to put in his cars and whatever, and there's none there anymore? I don't know, right? Now, when you're making silver for $4.50 an ounce, all in, $31 silver is very attractive to us. So if it goes higher, great. Right, we will love that. We're comfortable where it is at the moment. I hope it stays here for a long time. But you're right, there is definitely a fundamental reason why silver will go higher. And just on the photovoltaic silver consumption, the predictive numbers are so understated. And if you have a look year on year, corrected actual silver use in photovoltaic cells is substantially like 30-50%, sometimes even more higher than what's predicted for the next year. So this whole supply demand imbalance is only going to get worse.
Yeah, absolutely. Yeah, I mean, I've read an article about China that they are building every week 10 gigawatts of solar. So that is like something like between 5.5 to 6.5 million ounces, which are consumed. And once you have built your solar fabric or your photovoltaic field, this is off for the next 20 years, right?
Yeah, no, that's right. It actually does have a shelf life. You have to replace it with time. And what's been interesting in that part of the world, in the photovoltaic world, is as the photovoltaic cells started, they did use quite a bit of silver. right? But, humans are smart people, and they work out how to use less and less to get the same job done. So the amount of silver going into one cell, right, year on year has progressively got lower and lower and lower. But the number of cells has far outweighed that, which is why you see this very steep curve on the overall silver demand. So I think that sector is going to take a lot of silver over the next generation. And then once that stuff's embedded, get ready to start replacing it all.
Yep, correct. Absolutely. Super. I think so. The market looks great on the one hand. On the other hand, you guys are doing a terrific job with your mine, and also for the future. I think the future looks bright. So for me, rising prices in the MAG Silver shares are only a matter of time.
Yep, I agree. I mean, perhaps we have to show another quarter or two before the market thinks it's real.
Yeah.
The one thing in this business, you cannot pull wool over cash on balance sheet. Right? You can't do creative accounting. You can't, cash is cash.
Absolutely.
And our cash balance at almost $100 million, growing significantly every quarter. Ladies and gentlemen, this is real. We are making a lot of free cash flow.
Perfect. That was a great final sentence, George. Thank you very much for that half an hour. That was fantastic. I have invested in the right stock because I am a long-term shareholder in your company, and we know each other a good, 15 years, I think.
Yeah.
So thank you very much for the fantastic work, and I look forward to Q3 and Q4 also. And I would say just keep it going.
That's the plan, buddy.
Super. Thank you very much, George. Thank you.
Bye, everyone.
Yeah. Thank you. Yeah, ladies and gentlemen, that was George Paspalas, the CEO of MAG Silver, one of the largest silver producers in the world, and I would say one of the most profitable, even not the most profitable silver producer. And you heard it. No debt. That is one of the key things, key success here. On the other hand, $97 million in Q2, at end of Q2 in the bank. I think after this quarter, it will be well over the $100 million. That's for sure. And also after Q4. And with Larder and Deer Trail, this is the future of it. But please don't forget, Juanicipio, only 5% of the property is so far in the mining is done so far. So here also lots of exploration potential. And I mean, they only need to find it because the processing and the plant is there. And also, what I really like is that the grades are even going higher than they thought. So they have put up the guidance. This is exactly, the dream team, the dream world, what you want to have when you want to invest into a producing company. And MAG Silver is still way too cheap. Our price target is, for the next foreseeable future, meaning which in the next 12 to 18 months we see easily here 25 to 30 Canadian dollars, and longer term we will even expect approximately 40 to 45 Canadian dollars. So lots of upside, great company. Check it out. I am in. You should be too. Thanks for watching us, and bye-bye from Switzerland.